You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And for all you lovely hardcores out there, you guys can always join us live every Friday, noon Central, 1 p.m. Eastern. Getting messages for the peanut gallery over here already. Noon Central, 1 p.m. Eastern, via Mixlr, MIXLR. You guys know where to grab that link. Just grab it once, set it and forget it, or follow us on Mixlr if you want. That way you can be notified throughout the week, whenever, not just when we go live, but for this show, but also Typhon a little bit later today, or Option Block throughout the week, or our other live shows that are going on throughout the week. And wherever you go, as Mark hits my mic here, wherever you go, make sure that you send us your questions, your comments, however you listen. We do like to hear from you guys. Yes, you can hear that cacophony in the room, listeners. I am joined by just a rowdy cohort of crazies. Let's go in order of craziness. So we got to start with the greasy meatball, Mr. Mark Sebastian, who's very entranced by my legion of tchotchkes here in the studio. Mr. Meatball, welcome back to the show, sir.
Good to be here. Yeah, you've got some really cool new tchotchkes. I'm like the perfect age for when He-Man was really popular, which is a fascinating story.
Those are collector's items.
Yeah, shockingly, Mattel lost its license to Conan the Barbarian, and then the next year came out with He-Man.
Yeah, apparently there's a big Netflix special. There's a big Netflix special about that.
Yeah,
I haven't checked it out yet.
It's pretty awesome, but he's got, who's the triple? You got Trapjaw, and then who's the three-eyed guy? I'm trying to remember.
Well, there's three. You just said it. Triclops.
Triclops, that's right. You have Triclops and Trapjaw.
The two vintage.
Little disappointed you don't have Clawful yet.
Yes,
one of my favorites.
We haven't gone into the deep catalog yet.
And then there's also Man-E Faces.
Yes.
Who goes from man to robot to monster.
He's not here somewhere. We do have him somewhere.
All right. But anyway, it's just, for those that haven't been to the Options Insider Studios, you could also call it
here. You can play with a little one while we're doing the show.
Oh, that's really cool. You could also call it the Toy Collector Studio.
It is. It is fun.
This is...
Yes, Mark's already gone down the rabbit hole of playing with our toys. While he's playing with all that good stuff, it is fun in here, listeners. We also are joined by the Thompson twins, Matt and Mike Thompson, the trading principals over there at Typhon Capital. Gentlemen, say hello. You've managed to resist the toys well so far.
Ahoy there. Thank you.
Yeah, thanks.
And also joining us via the magic of that old technology known as telephone, we have Mr. Kevin Davitt, the senior instructor over there at the Options Institute. Kevin, we'll have to get you in studio one of these days, and maybe, just maybe, we'll have to get you on the Skype one of these days as well.
Yeah, don't push it. I would love to be in the studio one day. Skype, I don't know. That might be a bridge too far.
Depends if you can hang with all the cool toys in here. Now, clearly, you've already lost Mark. He's down the rabbit hole. He's irretrievable. While we work to recover him, let's see if we can get going with the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program where we break down the week that was and indeed still is from a volatility trading and trending perspective. It is, of course, a little bit past noon central here on Friday the 26th as we're coming to you live here. So, right about midway through the session or so. And most of the major indices feeling a nice little boost today, up around 0.75% or so. In the S&P, the Dow, the laggard, only up less than 0.5% today. So shocking. And then the tech-heavy NASDAQ leading the charge, up about nearly 0.8% or so. And all that green on the screen means VIX Cash taking on the chin, but not quite perhaps as bad as you might think, off about a third of a handle, right around, still firmly in the double digits there at 11.22 or so. And since you guys are our guests, we don't get a chance to check in with you guys. We'll go in order, so maybe we'll start there and go down. We'll start with our Thompson cohort here. What has been catching your eye? What has been going on with you guys? And how many mullets, VIX mullets and Tellums have you guys been trading of late?
Yeah, actually, the mullet's actually looking all right here. But
yeah, it is.
The main thing we've been noticing this month is just how VIX and S&P have been pretty positively correlated, which makes it annoying for VIX traders that use the curve as a kind of a trend signal. So the curve's telling us VIX should be going down, VIX is going up or staying flat here.
I don't know if you heard this, but VIX is 80% negatively correlated to the S&P, so that cannot literally be true, sir.
That's right. I guess 80's not 100%.
That's true. We're living in that other 20% twilight zone.
When it's actually positively correlated.
The 20% twilight zone. You're telling me I can't hedge all my portfolio with VIX? What are you telling me?
Are you kidding me now? That your hedge has been working great. Your long VIX futures, long S&P is the trade of the year.
Got the futures, yes.
Right. Long vol, long delta.
If you got the futures,
how could I lose?
We should really quickly clarify what I was joking about before with your strategies. Your VIX mullet and Tellums refers to how you guys like to trade the VIX futures term structure. Why don't you really quickly refresh our audience on what those actually are?
Yeah, so those, prior to coming on your show, those were our secret code words for our...
I've ruined the secret, I'm sorry. That's kind of my job here.
They were the code words for our VIX futures positions. So clearly mullet is short in the front and long in the back, like Sebastian's haircut.
Oh.
And then Tellum is the opposite. It's just mullet spelled backwards. So that those are our code words.
And we all know Mike's lying because I'm short in the front and nothing in the back.
That's true. He was being
yeah, that's the skullet.
He was being
the skullet.
He was being charitable. We're blowing the levels all over the place here, so our audio guys are going to love us. But yeah, you're right. It is charitable for your here, sir. But speaking, since you are here, some interesting things are cooking in your neck of the woods, Mr. Seabass. Why don't you regale us on what the heck you guys are actually up to over there in the Prime Meridian land?
At Carmeline, so we've officially opened this new fund. We got our trading account opened officially yesterday. Got the bank account open last week. Starting to receive funds. We're going to have our Carmeline Broad Cap Edge Fund starting
soon to be renamed the Prime Meridian Fund, right?
So, yes, the Prime Meridian Fund. It should be kind of officially launching on January 31st. We like to think of ourselves as, I'd almost call it smart beta, except it's not.
Stop. Don't you dare say smart beta to me, sir.
It's a smarter approach to getting along the market, unless it goes up 7% in a month. Then it's not as smart, I'll be honest. We're working with my friends here, Mike and Matt, to partially borrow some of their signaling to engage in some just-in-time hedging as well. In addition, just handed Mike and Matt 3 copies of my book, Trading Options for Edge.
With a nice big headshot I see on the front. A signed headshot with them, too. So
signed headshot. And what people might not know is that, I want to do a chapter on how to hedge using VIX. And I said, why am I doing the work when I've got two buddies that'll do the work for me and also know more about the subject? So Mike and Matt actually put their heads together and wrote chapter 14 of my book, which is all about just-in-time VIX hedging. And believe it or not, I've gotten more emails about how great that chapter is than any of the stuff I wrote. Kind of frustrating.
We're still waiting for the check, too. I haven't seen anything.
I was going to say, has he, aside from these books, is one book your payment for an entire chapter?
I guess so, yeah.
One book. Congratulations on that. I'm looking forward to the name change and my marketing invoice when you do that. But aside from that, sir, aside from the big fun, which has been taking up all the oxygen in the room, I know you haven't been watching as much Smart Beta as I have. So what has been catching your eye this week from a VIX perspective?
Yeah, it's the same thing that kind of Matt brought up, is that we've had this run in VIX, run in S&P. Part of it's been driven by skew. Skew's been really big. They're finally interested in buying puts. The other piece was, and I put out a note on this earlier, is that there was a lot of open interest on the 28.5 strike expiring this week and in regular Feb. I think that drove some short covering and some futures buying to hedge off Delta. In addition, I guess Goldman put out a note that Mike was telling me that they're actually seeing call buying in the S&P 500.
Yeah, yeah, they were attributing this positive correlation this month to aggressive call buying.
Well, aggressive call buying in the S&P never leads to
That always works.
Yeah, because let me tell you, folks, when any time an equity goes from a standard skew where puts are more expensive than calls to calls being over puts, that never signals any top or anything like that. That's never happened in, let's say, dot-com booms or in financial booms or in housing booms or currently in an S&P boom.
Worked out okay for Apple for like 2 or 3 years.
Yeah,
it did. Then it turned around.
Yeah, it was really bid in Apple, and then Apple went from 700 down to 400 before everyone finally said, "Oh wait, it's time to make this a hedge fund hotel again."
And last but not least, Mr. Davitt, what has been catching your eye in a fairly intriguing week, shall we say, out there in VIX land?
Yeah, it has been. What caught my eye so far is the characterization of the VIX Mullet. I have to admit, I love that. I was curious why I got that name, but it makes a whole lot of sense. And this week reminds me of a book I read the Cliff Notes for, A Tale of Two Cities, in that it's the best of times for your passive longs that just, for whatever reason, don't have time to worry, and they're just long the market. And this is kind of the worst of times for index option market makers. Andrew, who I will probably mispronounce his Italian last name, Giovinazzi, your cohort, Mark, mentioned it 2 weeks ago when we were on. What is it?
Like a pizza. When you in Italian the double Z-I as the so just like pizza, it's Giovinazzi. Making sure not.
I am Irish, and that doesn't roll
emphasize
off
the
my
Nazi
tongue
at the end.
quite like
I
this.
was trying to make sure not to do that, but it happened.
So, to his point, and in environments like this, which are unusual, where we see the positively correlated SPX and VIX for the better part of this week, quite frankly, it sucks to be a market maker because you are an index market maker is almost always short puts, long calls, and short futures, and your P&L looks miserable this week, and maybe a little bit of it is coming back on a day like today, but you're not seeing the term structure or anything get clobbered enough this week, and you could have had some bad gamma scalps too. So it's great to just be passive long and watching the SPX move up 7% in the month of January. I don't know how that bodes for a January effect, but it's the best of times and the worst of times, depending on how you're affiliated with this market.
We were talking about this earlier. Is that on top of the fact that you've got this just crazy market, lots of short calls. Next week is kind of like the earnings bonanza for the S&P 500. I want to say that 8 of the top 10 report next week, and all within like a 48-hour period. I think from after market close on Wednesday to before market open on Friday, we get Apple, Microsoft, Google, both Googles, Google and Google. We get Amazon. We get Alibaba, which is not in the S&P but is as big. We get all of these huge names. That's gonna gum up premiums in VIX itself. What I'm a little surprised by, and I'd love the team double T, team MT, team same initials, and 2 out of 3 same initials. They're missing Mark Thompson, why aren't we seeing, with all this action, why aren't we seeing anything out of these little weeklies? Like the Feb 21s are moving and responding. The Feb 7s, which you would think would be like soaking up all this earnings risk, are seeing zilch. They're zero effect. Yesterday, or was it Tuesday, where we had that crazy 13-point sell-off, and VIX almost went to 13. The Jan 31 future didn't move. The Feb 7 future didn't move. What is going on with the near-dated stuff?
Yeah, so my guess would be, obviously the weeklies and the more specialty dated stuff don't have nearly the liquidity or volume as monthly stuff. So looking at the back end of the VIX curve, move up this month, I think it's much over a macro kind of just re-rating of the VIX and the whole term structure. So a bit of a mean reversion this time on the upside, so a grind, and that's not necessarily, if it's a big kind of macro type of outlook or trade, that's not going to show up in like your Feb 7s probably.
Yeah.
Good.
No, that's a good point. I think you see the back end of the curve moving this year sort of in lockstep with rates, with 10-year Treasury rates. So that I think might lend some credence to that macro idea.
Yeah, and have you guys looked at Andrew pointed this out, and I'd gotten asked about it on like a TD show I did yesterday. Look at the correlation of the VIX to rallying rates in the treasuries and the just destruction of the dollar. I was until somebody pointed that out. I was like, wow, the dollar's getting killed. Boy, the VIX is really going up. I had not put that maybe there's a relation there. You don't think about it as a non-equity piece, but how would the dollar? Why would the dollar tanking and rates rising? Why would the dollar tanking and rates rising cause VIX to act the way it's acting?
Yeah, I mean, unless it's it could be anticipation of capital flow out. Any non-dollar denominated investor, that's a double whammy, right? They're getting hurt on both sides, so could just some of that kind of macro re-rating. I mean, the back and forth between Mnuchin and Trump on the dollar in the last 2 days has not helped anything. It's been kind of schizophrenic.
He's quicker than his glasses.
Yeah, why does he wear tinters?
They're transitioned. So he's inside, they're regular, and when he's outside, they're sunglasses. They're transitions.
How futuristic of him.
Yeah, no,
but guys,
not good.
Since we're talking the VIX futures, it's been a while since we've had you on. Obviously, a lot has happened from a macro perspective over that time. In fact, I'm looking at the futures right now. We're at about a 0.20 or so between the front month and the cash, and then about a 0.70 or so out between the cash and 2 months out. But we've seen threats of nuclear war, threats of every sort of seems like crazy macro development we've seen play out in the marketplace over the last 6 or so months, probably since the last time you guys were on. I'm curious, looking back, were there any moments that really stood out for you guys that were maybe singularly bizarre from a term structure perspective, or just really weird, or you really expected, the futures to go crazy contango and they didn't, or vice versa? What resonates for you guys? Talking, our nuclear launches, pick your poison, but what really resonates for you guys over the last 6 or so months?
Yeah, I think over the last 6 or so months, I would say the surprising thing to me is all those potential negatives you mentioned. The market did not react. The half-life of all those worries were measured in hours, if not minutes. Think about the repercussions on the SPX from each successive North Korea provocation. I mean, it went from like a day to maybe an overnight thing to, S&P was down from like 11 p.m. to 2 a.m. So it just more surprised that all those potential negatives had zero follow through on the downside for S&P or upside on the VIX, and then couple that with this month, we haven't had any of those provocations. S&P's to the moon and VIX is up on the month. So those two combined is just an odd coupling.
And we thought 2017 was going to be an outlier, and it was. And now we're so far January 2018 is its own different flavor of outlier. So it's just wait a month and you get all sorts of new crazy statistical aberrations.
So how are you guys? How are you guys trading what's in front of you guys right now? I'm, without giving away the ship. I mean.
Really? Yeah, I'm losing money.
We moved into the mullet early in January, so the back end has made us money. We're in some of the deferred month contracts, and those haven't jumped huge. They've just risen 2-3 ticks a day pretty consistently. And the short end on the front of the curve, we're trying to just more tactically trade that back and forth, and that's the one that hasn't worked for us. So it's been what did we call yesterday? Purgatory?
Yeah.
It's all purgatory.
It's purgatory. I think probably what's going to happen is once you get maybe some of these earnings out of the way, if you can get rates to cool off, the dollar to stabilize, you'll see a big catch up in the front part of the curve. It's going to snap down towards VIX, I think, at least for a time being. And if really, I guess you'd want to see some momentum break in the SPOOs too, like they're up they're up another 20 points.
Handles,
the typical 18 handle day. But you need to see that kind of break and get that call demand off, and then you'll see everything normalize.
Is earnings season really a big driver for you guys in terms of what you guys do? Are there particular names that really set up well for a Mullet or Tellum, or do you like to watch it more in aggregate just to kind of see the impact? Obviously, we actually had some interesting data on the show a couple weeks ago where the earnings cycles actually seem to be tamping down volatility a little bit, maybe probably the opposite of what you expect. So are they big drivers for you, or you guys kind of more just kind of play wait and see during earnings season?
So, we're cognizant of the reporting schedule and calendar, and for us, it is really all relative to what that individual name's weighting is in the S&P. And I think historically, in that pattern has held pretty strongly. That earnings season has what we call a swell, or kind of a natural rise into that. And with all the different companies reporting, that leads to basically dispersion, and you see vol kind of bleed out after that. So we're definitely seeing the bump up into this earnings season. I do not think it's all driven just by the reporting schedule. State of the Union's next week, the Fed's next week. So for individual name setups, we don't trade those, but we're just cognizant of the reporting schedule by market cap.
Yeah, and the one I'm interested in is Amazon. I think that they've captured. 4 years ago, we didn't think about earnings and it's kind of as a macro effect. But now that, FANG and the top 10 names are really, if you look, advancers, decliners, there's been a lot of days where there's a lot more decliners than gainers in the S&P, and the S&P's up 15 because those top 8 names, top 10 names, those top 9 of the 10 names, minus P&G, have really run the S&P higher. It's been all Apple, Microsoft, and to a lesser extent, even ExxonMobil and Chevron have been better of late.
All right, well, you guys get to take a break now. We've given Mr. Kevin enough of a break. It's time to put him on the hot seat. It's time for Russell/Kevin's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody, you guys know the drill. This is the portion of the show where Kevin gets to hold court for about 20 to 30 minutes on the deep minutia of VIX weekly options. Go for it, Mr. Kevin. I've set you up. We are awaiting you, sir.
Yeah, I'm gonna definitely chew up 20 to 30 minutes. I think the stuff that you've been touching on, mentioning how infrequently you see call skewed equity names, maybe touching on the fact that I think we saw a triple levered FANGs ETF come to market this week. You have a number of brokerage firms pointing out that that cash levels in accounts are at the lowest levels in more than a decade, but that has nothing to do with weekly VIX options, which were arguably fairly active this past week. So I have to go back to last Friday, we saw the Feb 21st 16 calls trade, and these options have traded in blocks around 9,000, like 8,500 to 9,000, last Friday through Wednesday, trading around 65 cents with open interest around 35,000 on that line now, which is fairly big for a weekly series. I think I was talking to Russell before this about that, and he made it sound like you term structure lovers arguably saw kind of a kink on that Feb 21st week, so perhaps fodder for future discussion. On Tuesday, the Feb 27th 16-17 call spread traded for a dime 4,300 times. You know, just some cheap dime risk, dollar upside, 90-cent upside on Tuesday. But then Wednesday, we saw a whole lot of the Jan 31st. So again, we're talking about the end of this month, which has been pretty wild, whether you're talking about VIX or the SPX, the January effect. We saw the 11-12 put 1x2 spread. That traded 32 cent debit, buying one of the 12s, selling two of the 11s. So you're targeting an 11 settle at the end of the month. That traded 15,000 by 30,000. So if you get your ideal settle right at 11, given the size of this thing, somebody would make about $1 million, and you're risking a settle on the downside below 1032. So that's interesting. And then today, a whole bunch of end of January 17 calls are trading a dime, but it's likely closing because it's right around the open interest coming into the session. VXX keeps grinding higher, so all those sell the pop VXX types. Also worth noting that the legacy VXX is going to roll off at the end of this year. VXXB is something you should probably put on your screens. And a little golf clap for CBOE Global Markets, the parent company. We got the listing for VXXB. So that's my weekly VIX wrap. You on it?
Good. Well done. You almost filled your allotted 30-odd minutes. I'll see what I can do for the rest for you, sir. Moving on to the big mothership. I love this photo here of we got all the figures floating around the room today. This is good. Big mothership. Actually, a light day out here in the big VIX options. Only a little bit more than 250,000 contracts on the tape. ADV hovering around 731,000 these days, so still pretty lofty. Yesterday, pretty much a couple of busy days this week. Yesterday, not one of them, 526,000 on the tape. Wednesday, though, lighting it up, nearly 1 million contracts lighting it up. And Tuesday, 719,000. Monday, comparatively quiet, 646,000, about 4.1 calls to put. So Russell, if he was conscious after all of his horrible accidents, is still very nervous. I hear he's recovering, so thankfully our thoughts and good wishes go out to him as he valiantly saved an old lady from a mugger and got slashed across the forehead for his efforts.
I know, so an old lady driving a car accident.
Yeah, well, that too. I'm trying to make it sound a little better. He somehow dodged a car and he got hit by a garage door. I still don't know how those two happened, but c'est la vie. He seems to be recovering from his horrible concussion. In terms of what's been lighting it up out there in VIX land, number one with the bullet is still our old friend, the whale, the Feb 15, 607,000 now, crossing the 600K open interest mark for our number one strike. Number two, hot on its heels, the Feb 25's also part of that three-way trade, 570,000. Those bad boys on the tape. Number three, the Feb 22's kind of its own thing, not part of the three-way, 428,000. Number four, the Feb 16's, a whole bunch of Feb love on the list this week. Feb 16's, 413,000. Number five, the Feb 17's, 410. Number six, the first and only put on our list. I bet you can probably guess which strike it is. Yep, it's the Feb 12's, the third leg of our three-legged whale trade here, 404,000. If you want a detailed breakdown of how that trade's been doing of late, listeners, tune in to last week's show if you missed it. We did a nice extensive breakdown, and we also back tested it a bit to see how it performs historically. Spoiler alert, not that great. Number 7, the March 22s, 342,000. Number 8, the Feb 20s, 303,000. Then we break down through the 300K level for number 9, the Feb 19s with a whopping 279,000. Round out the top 10, our second March on the list, the March 16s with about 250,000 contracts open. Total, a pretty hefty 12 million contracts outstanding, about 9.65 on the calls and about 2.35 million on the puts. Before we roll off VIX options, Mr. Meatball, in addition to all your trap jaw and He-Man love and your busyness with the launching the new fund, any big VIX mothership options activity catching your eye this week?
Yeah, today, or actually all week, we've seen guys coming in and crossing puts tied to futures, kind of a straddle play. So guys have been basically selling the 12s and the 13s tied up to futures. I like that as a straddle. It's a kind of a smart little play. We saw some decent, there was a huge April spread that went up. The 37.5 spread went up like 10 by 27,000 or something like that. Guy was a buyer of the 20s. A few other little 1x2s went up as well. This morning, a July 13 put seller tied to 15 in the futures. That's not, with that little move, that's not a bad little play. No. If the guy's smart enough to cover, he's going to be pretty happy if he manages his futures correctly.
Yeah, the futures leg is going to be key on that one.
Yeah, really well. But I like that as a play a lot. But that's been kind of the major stuff I've seen in VIX that's gone up. And then, just really heavy volume in the VIX futures. We got another day where we're going to do, I think we've traded well over 100,000 in the front month all week, right?
Yeah, speaking of volume in VIX futures really quickly, because we kind of talked about this a lot last year on the show, but you guys obviously weren't able to join us. If anyone had said to you at the beginning of last year that we're going to see, obviously, his new administration come in, but also we're going to see VIX just erode into comparatively anemic levels, spend a significant portion of the year in single digits, and yet we would see multiple record trading days, not just for the options, but also for the futures. If I had told you to that on like January 1st of last year, would you have thought I was a madman? I would not have forgiven you or blamed you if you did.
More of a madman.
Yes, more.
No, I totally called that one.
You were the one.
Yeah, I just didn't.
You were the one guy.
I just didn't tell you.
That's why we didn't invite you back, because we thought you were crazy. And then it turned out in hindsight that your madness had a method to your madness. I don't know, Mr. Kevin, I know you spent a lot of time looking at the VIX weekly options. Anything catching your eye out there in the big mothership before we move on to some earnings vol and anything else?
No, I think Mark did a good job of recapping that, and I think some of the other stuff that it looks like we're going to lead into with the earnings week ahead, with the bigger picture, what's gone on in commodities. I do think this move in the dollar and also in bonds, where the 10-year yield is arguably at a meaningful pivot point, warrants attention. So let's get to it.
All right, let's get to it then on all things other vol. So we'll start with outside of the big VIX complex, and we'll get to, of course, as he alluded to and Mark alluded to earlier, it is we're in the teeth of earnings season. How nice is it to say that? We still have to pay attention to macro, obviously, but it is nice to have some discrete events we can sink our teeth into every now and then. There's a number, there's a move. Does it equal or not? It's pretty straightforward. It's kind of nice in this kind of world we live in these days to have these events. Of course, you saw Netflix kind of dominating the action earlier this week on Monday coming off. They were pricing in a pretty lofty about 7.25%, a little about $16.50. Turns out it wasn't lofty enough, listeners, with the stock moving pretty big, opening up about 12%, trading up throughout the week as high as about 20%, about 45 handles. So premium buyers leading the way out there in good old Netflix. Also moving on, my old stomping grounds, Intel out there yesterday on Thursday. They're pricing in just shy of $2, about $1.80. That works out to about 4%. The stock opened up nearly double that, up $3, so nearly 7%, trading up nearly $5 intraday today. So again, premium buyers leading the game there, and our old friend Starbucks as well, also coming off after the bell last night, pricing in a little over $3, so a little bit north of 5%. They ended up opening down a little bit shy of $3, about $2.50, so right around 4%, but traded down about 6% intraday. So big moves across the board here in earnings season. I know, Kevin, I'm sure probably earnings season is probably a big driver of activity for you guys at the Institute. Just maybe just in terms of people asking questions, how does this relate back to what you guys do out there in the VIX land? So A, what are your thoughts? Is earnings season a big driver for you guys? And then B, what's catching your eye out there this season so far?
It is a big driver, and I think a lot of individual traders like to trade around events like that. My tendency is to have people analyze what names have done historically and try to temper their expectations around earnings, or at least let historical tendencies inform their trading decisions. So that's something that I preach when I get in front of kind of retail audiences. Right now, I'm kind of blown away with this everyday hire when I read stuff like if you want to be just a little bit concerned going into earnings season, you don't get too many broad market melt ups, and you could arguably characterize what we've seen over the course of the last couple of months as a melt up. And I just came across this thing last week that in 1929, probably not a year that needs introduction no matter how old you are, if you've been around the market for any length of time, the Dow melted up 29.8% in a little over 4 months. And if you look back at the Dow over the last 4.5 months, it's up like 23%. I just think you see some of the bellwethers of euphoric market activity, but truth be told, I probably would have lost a lot of money, because I think you could have said that for the past couple of months. So it will be interesting to see if the market can build on the momentum that it's had coming into earnings, and how much of that will be discounted based on lip service to tax advantages anticipated from the legislative event we saw a couple weeks ago.
And Mr. Meatball, what are the crazies over there in the pit chat land? Which earnings are they fixated on? Are they Intel? I'm sure probably Netflix. They like a good juicy Netflix.
Netflix was interesting. I think everybody's watching Apple because that got that's been the only like mega cap that's gotten creamed. And I'm looking at Amazon, and since their last earnings report, Amazon is up over 25%. They jumped $100, $110 on earnings. Over the next 3 weeks, they jumped another 3%. And then since the middle of November, so 2 months, we're talking they're up almost 20%. That straddles pricing at about a $100 move, and it's probably too cheap. You gotta look, and then the interesting thing is the Feb straddle behind it's only like $6 more expensive. I mean, I don't know why you'd buy the Feb 2 when you could buy the Feb Reg. I actually just put out a note to this. I do some research for Mullet Prebon. They're a brokerage execution firm, and I did put out a note this morning on Amazon, and I'm looking at them. I don't know how they're going to be able to meet those expectations after a rally like that. And one, I have no interest in playing Amazon other than legging into butterflies for credits.
So you're not short the Amazon futures in the new Prime Meridian fund, sir?
No, I do. I did put on a one-lot butterfly for a credit today. I was very proud of myself. 2.5 points wide.
One lot. There you go. Slinging the size.
But I wouldn't touch Amazon earnings with a 10-foot pole, and then I will. And then after they report, whatever move they make, it is going to keep going hard in that direction. My guess is, I can't imagine a scenario where Amazon is able to meet the expectations that are lofted upon them currently.
That's kind of been the rub about them pretty much for the last 15 years, right? They can't. I mean, look at they bought Whole Foods and rallied off that. I mean,
this rally in particular,
who else spends billions of dollars and rallies off of it?
This rally in particular is a little nutty.
Based on the piles of boxes my wife's got coming every week, I think they're going to blow it out.
Did you go? Yeah. Have you been to Whole Foods and bought your Echo yet and made all the meta things come together?
Yeah, no kidding. I already think my phone's listening to me. You think I'm going to put something in my house that's also listening to me?
Right.
It's listening to you right now, so watch out. There are echoes everywhere around here. And not in here, luckily.
It's hard not to listen to you, Mark.
Well, speaking of listening, people over there at Deutsche Bank certainly want people to listen to them. They put out a research note this week. I guess you can probably file this under the category of the week, but they do have some numbers backing it up, so it's not quite just anecdotal on their front. They came out and pretty much said, there's a bit of a correlation between VIX going in the toilet and people having an interest in all things crypto. And that's something we've probably been saying quite a bit without the actual numbers to back it up here on the show, but they're coming in. So you can certainly file that into the duh category. But they followed up and said a growing number of institutional investors are watching cryptos as the frontier of risk-taking to evaluate the sustainability of asset prices. The result is that they're actually moving into cryptocurrencies as VIX continues to hover. These days a little bit in double digits now, but for a while there, certainly when they wrote the lion's share of this research paper, VIX was still in single digits. So I don't know, Mark. Does this come as is this the duh moment of the week for you? That hey, VIX is down, people are looking at other assets, or did you stroke your chin and say,
Yeah, I mean, I think the news more has been kind of what's happened to cryptos since. And, one of the baseline arguments for crypto, like the reason why the guy invented Bitcoin, one, wanted something that wasn't trackable, the blockchain. But what's the argument everybody has, right? The government prints money, and the dollar's going to zero. It's a fiat currency. It's worthless. Why would you ever want to own dollars? So let's create our own currency with a constant production rate, similar. It's very Milton. There's an underlying Milton Friedman to the Bitcoin. But then, during what has to be probably the biggest pounding the dollar's ever taken in the last, 3 years, gold's way up. How's Bitcoin doing? Mm-hmm. Yeah. Right. It's been so I think at least over the last, you could basically say the last 6 months of Bitcoin craziness had nothing to do with dollar pricing. Maybe now that it's down to $10,000 a coin, maybe it'll start tracking the dollar. But we've seen gold rally, dollar get smoked, and meanwhile Bitcoin has just been its own thing getting destroyed.
Yeah, I mean, I think like every mania, it starts with some logic to it, and then people take it too far, especially when money is as cheap as it is, dollar money or fiat money. So you're exactly right.
Have you guys started mulleting and Telluming the Bitcoin futures yet?
No, Typhon actually does have a crypto fund that they just launched last year, attracting a lot of interest, and they made some money in December, I believe, shorting it. So
all they needed was a nice listed product and getting it out. Speaking of the listed, I'm looking at the numbers here, Kevin. Pretty active week here, active day here for the Bitcoin futures with the front month doing nearly 7,000 contracts. Bitcoin, surprise, another minute, it's moving again, taking it on the chin again today, hovering around 11,000 in that front month futures contract. Kevin, I've been asked conservatively, 100 times over the past week, when are we going to get Bitcoin options? So I'm guessing you're over under at the Option Institute over there. It's got to be about 1,000. So first off, how many times have you been asked when are we going to get these options? Because certainly everybody wanted them. And then B, what are your thoughts on this research cementing the link between a ever diminishing VIX and the interest in all things crypto?
With regard to how frequently we get that question, I'll take the over on 1,000. I wish I did have an answer, but from a corporate standpoint, you need to build a base in any kind of product before, particularly something like this, where there's so many eyeballs and so much volatility and so many people that probably want to see it fail primarily because they just don't get it. And I'm not making a political argument either way with regard to Bitcoin. But we need to go through a handful of futures expiration cycles successfully. I like to see, so you pointed out the volume numbers this week. I think it's interesting to see both open interest and average daily volume grow on a week like this, where we've seen, by Bitcoin standards, relatively muted volatility. And again, everything is relative when you're talking about the cryptos, because the high to low move in futures this week was like 16.5%, but last week it was double that. So I don't know when options are coming. I think a whole lot of people would be much more comfortable using or expressing a market sentiment in the cryptos, or Bitcoin specifically, using options as opposed to outright futures, particularly given the volatility. Now, to the first point about volatility chasing, our reptilian brains have done this throughout history, so it doesn't surprise me at all, whether it was crude oil or commodities in 2008 or 2011, or housing just before that, or technology in 2000, or just countless other examples. MLPs come to mind. In a money is cheap environment, which it has been unusually, historically unprecedented, cheap money for the past decade, you see people incentivized to move out that risk curve. And so I think it stands to reason that you see more eyeballs and more activity in products that move around with considerable velocity. I think that will continue.
Since you mentioned reason, let's get into the deeply reasonable, easy to say, deeply reasonable and rational portion of the show. Yes, it's time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody. That music means it's time for you guys to take the reins, answer some questions of yours. Before we do that, we'll pay off some questions we asked you guys, including last week. We were talking futures in the Bitcoin, and we said, hey, futures at the time were comparatively lofty, 11,500, for the good old days. And we asked you then, if you're looking out a month, let's pretend the options existed. How would you want to trade them? Would you want to buy a 5% out of the money call, buy a 5% out of the money put, sell the 5% covered call, or just plain old short the future? I'm thinking a little bit of a recency bias here, because about a third of you said buying that 5% put. I'm guessing the sell-offs kind of drove a lot of that early voting. Coming in hot and heavy, number 2, though, 5% out of the money call, 27%. 25% saying, the heck with it, I'm just going to short the future. 16% saying selling 5% out of the money covered call. And I'm going to interrupt your planning for your beverages here, gentlemen, because I'm going to ask you guys a question now. So we asked our listeners this week, because we were talking ETFs at the Inside ETFs event. I know you guys don't trade a lot of ETFs, but maybe you'll get into it. And we were asking, hey, let's talk ETF options. Quite simply, easy question this week. What is your favorite ETF or ETP type option to trade? Gave you a smattering of choices, something in the vol space, commodity space. So we said SPY, of course, GLD, VXX, or other. We got a lot of great others. Of course, Qs. We got pick your esoteric ETF. Somebody sent it in for us. A lot of people voting for the non-existent Bitcoin ETF yet. They said as soon as that comes out, they want to trade that. So a lot of votes there. Let's start with let's go this way around the Thompson twin corner here. What is your vote? I'm going to turn the screens. Not that you're like Mark would cheat, but you guys wouldn't. So which is your vote, and more importantly, which do you think our audience is picking?
So the ETF or ETP options that we trade would be all in the vol complex. So UVIXI, we like those options a lot. The VXX, super liquid options. So there's a ton of different strategies around there. And for your audience, I'm going to guess that they're probably
VIX, right?
Yeah, I'd say they're in the VXX, or maybe with tech being so hot, they're in the Qs.
Mm-hmm. We had write-ins. We didn't have Qs. We only had one index choice. So
we had
it was
FANG
SPY.
ETF.
So it's SPY, GLD, VXX, or other. You wrote in for VXX is obviously is a popular one. Go ahead.
Yeah, that's VXX would be my vote for sure. I think
2 votes for VXX. Mr. Meeple, I can make it a third.
Personally, I trade VXX, but I'm going to go with your audience wanted to trade the new FANG ETF that they've got out there, where it's all
The triple levered
the
one?
triple levered FANG ETF. Or they're doing, let me see, they're doing SKF. They're doing the short financials. Double short financials, excuse me.
Two obscure write-ins here for Mark. Mr. Kevin, save us here. What is your vote here, and what do you think our audience is voting?
I mean, we're on volatility views. My vote is VXX and the volatility complex. We're home to it. But I do think an argument can be made for really understand. I think there are plenty of people that do not understand the role that term structure plays in a lot of these volatility-linked products. That's at their peril. That's arguably why there might be edge, more so in products like these than in some others, and the velocity that something like that moves at makes it attractive. And that's no knock on something like SPY. I would prefer to trade index options. Again, we're home to them. I'm plugging it. But I do think it will be interesting to see what sort of uptake you get on these triple levered leadership names. I just think they don't ring a bell at the top, but stuff like that tends to happen.
Yeah, they have their devoted audience. Not for ours though, ironically. Ours still loving the SPY. 53% hitting the SPY. 18% GLD. GLD actually beating VXX in our poll. 16% only for VXX. No love for VXX. 13% coming in for the other. So you got a bunch of other questions here.
Right, other one.
Yeah, well, there you go. There you go. Here's a good one actually for you guys here. This comes from Cat65, so maybe he's laying some Ethernet cable. I don't know. He's here, perhaps she asking, are there, I'm assuming he means are there other vol futures out there aside from VIX? So I guess clearly they want to sling some volatility futures, but they don't say why. For whatever reason, VIX is not up to snuff for them. So what else can these guys do, or these ladies?
Well, there used to be a few more products at CBOE that didn't take off. There was emerging market vol futures, Brazil vol futures, oil vol futures, gold vol futures.
Yeah.
Really,
they only have RUT now. That's it.
Yeah. So there's RVX, Russell vol futures, and then it's not at the CBOE, so we won't even mention it. But Eurex has VSTOXX futures.
Yeah. So you got some. I wish those S&P variance futures traded. Those would be fun.
Yeah. Kevin, go ahead. You got anything to add here for our friend Mr. and Mrs. Cat 65?
No, mentioning the RVX and why there aren't more people that play the relationship spread between RVX and VIX, or the VSTOXX and VIX, or and I'm not sure I would play the relationship spread here, but the 10-year VIX, which there's also a future for. There are others that have died on the vine, and there are tons of products that are introduced and just don't get pickup. So that's another. Going back to the Bitcoin and the options, you need to see the underlying market, and before you list like the third derivative as far as Bitcoin options go, thrive before you list more products. So there are a whole bunch of volatility futures. VIX is the bellwether, but RVX would be something I think there ought to be more eyes on, and I think there's tremendous spreading opportunity there.
I've had a few conversations just recently as last week with the Russell folks about RVX, our old friend RVX. We should talk about that product a lot when Russell was on the show with us, and we're looking forward to hopefully one day be able to talk about it again, because you're right, it's a product that just structurally makes a lot of sense. It's small cap vol is structurally more volatile than S&P 500, so it should be attractive from a volatility product perspective. But for whatever reason, it never caught fire. Maybe second or third time here will be the charm. Meanwhile, we got to keep on rolling. See what will be the charm for us. It's time to embarrass ourselves wildly. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, another week here, and not a bad week for us here on the old crystal ball. We were had a nice range last week. VIX Cash coming right about 11:33 or so to finish up the show here. And we had Russell, of course, on the upside, picking almost 12. I think he was concussed, 11.99. We had Matt Amberson Oratz over there coming in the middle at 11.5. We had you coming on the downside here with 10, and I was coming in the middle there about 10 double, 10.55. So it looks like Mr. Oratz taking it last week. Of course,
Russell's the closest, believe it or not, in shocking fashion. Without Matt here, Russell's the closest.
Without Matt here, yes, but we'll instead extend it to the guest seat because we'll say guests get a victory last week. So we give you guys the dubious honor of it going first. Who wants? You guys can choose amongst yourselves which of the two of you wants to go first, or do you want to do one? Do you want to do one collective bet for the two of you, or do you want to both go on the horn individually?
They're now doing their double dare huddle before they answer Mark Summers.
That's right. Is this like Price is Right?
Yes, it is. It's not closest without going. Yes, closest. Not closest without going. You can go over if you want.
But I'm gonna say sub 10. I'll say 9.99 then.
Oh, I like that.
Nice.
9.99. All right. Are you going to join with him? Is that a joint answer, or is that?
That's just me.
Okay.
Yeah. I'm going to go 10.15.
Ooh,
Very specific.
I like that.
Tight grouping here. Yeah.
We'll just go around the horn. Go ahead.
So I was about to say my outlook is my position and go like 8, but that's an old saying for traders, guys. What do you think the S&P is going to go? My outlook's my position. Basically, whatever the market forced you into.
Right.
Yeah. I'm with these guys. I think we'll be sub 11. But somebody, I think, will be sub 10 potentially after earnings. But somebody has to go high. So let's say that there's some craziness. I'm going to say that Friday happens to be the day that we sell off 12 points. Thus, VIX goes to 15.
Oh, wow.
No, not 15. I'm really guessing I'm going to guess 13 and a quarter.
We'll say, did that garage door hit you like it hit Russell? 12 and a quarter?
13 and a quarter.
13 and a quarter. Okay, 13 and a quarter. Wow. Okay, someone's got to play the resident.
That's with a down 12 day.
The
We're
resident.
going to have 12
caveat. I'll put a caveat.
All right.
With a down 12. It has to. Now, those two things have to happen.
Don't you know a 12-handle down move now gets you a full 1 point rally?
Yeah, that gets you nothing. All right, so we'll go around then to Mr. Kevin, who's lacking a nickname. We'll have to get him one here on the show. What are you feeling? Are you going to play the Russell card and go crazy high? Are you feeling low? What are you feeling next week, Kevin?
I'm not going to parlay my bet like Mark did. I think it's interesting and worth pointing out that since the 16th, we've seen cash VIX settle above the 200-day simple moving average every day. And this is the longest stretch of settles above the 200-day since last July, August, when we had fire and fury and some concern over nuclear war. Anyway, I think we'll likely drift back below that. The 50-day moving average comes in at 10.5. Nice round number. That is my choice.
So 10.5, you said?
Yep.
See, that's why I don't like going last, because I was going to go keep my 10 double from last week. But I was a charitable host, and now I get bumped off of my spot. I have a huge swath. I have 9.99 to 13 and a quarter. But I wanted to go in the low 10 range. That's all taken now. So I guess I got to go north of. I don't know. I'm not. I guess I can go. I can go into the. I could be the oddball on the downside. Okay, let's go a handle lower than where I really want it to be. Let's go 9.55 or something crazy.
Really, you're not taking 11, even though that entire 11 complex is there for you.
It is there, but I'm going.
There's an arbitrage there.
I'm being crazy. I'm feeling the downside. I'm feeling the heat this week. So
all right. Well, I hope you guys are all right. I bet against myself, so. So at least I'll have that.
There you go. So it's an effective hedge.
Getting completely worked over by the market. At least I'll have.
But at least you'll have the victory on Crystal Ball.
Yes.
Right. Listeners, that music means we've come to the end of a Vol party, and what a party it was. We had, 5 of us here on the old show today, so all sorts of crazy. It's always fun to have a little bit of fun in the old studio, even if they do steal all my fun tchotchkes. Security's watching you, sir. You run off of my trap draw, you are in trouble. All right, but before we do that, let's go back around the horn one last time. Let's go in order this way. You guys are always working on interesting, cool stuff. What is coming down the pike over there in the Mullet and Tellum land that is Typhon? Either one of you can go, whichever one.
So yeah, we're just keep plugging along at Typhon, running our couple different programs there, and
and just, yeah.
Yeah, typhoncap.com to check those out. And you can follow this is Matt. You can follow my Twitter handles @DynamicVol. Listen to me ramble.
There you go. He does like to ramble on Twitter. I'll give him that.
He's actually a good follow. For those of you that follow me but don't follow Matt, you should follow him. He's a good follow.
I'm looking at the retweets of your tweet, and you have some interesting followers, sir. I'll just leave it at that. Mr. Meatball, real quick again, what's going on with All Things Prime Meridian Fund?
Yeah, well, we're going to be done with our kind of pre-launch rates for the new fund at the end of next month. So if you reach out to me by Feb 28, you can lock in some introductory rates for our new hedge fund, and then my book, Trading Options for Edge. Like I said, I just gave Matt and Mike a couple copies. It's doing pretty well on Amazon. So if you're and the reviews have been great. So if you really are interested in some advanced options trading, like real stuff.
I hear that Chapter 14 is killer.
Chapter 14 is killer, but it actually is really good stuff. On top of the fact that it's a decent book, there's another VIX guy that wrote the foreword named Bill Luby, who these guys know. And
we don't speak of him.
And my copy editor was Russell Rhodes. So it's been through the ringer.
Been through the VIX
experts.
ringer. Yes, been through the VIX ringer. Check it out there. Trading Options for Edge?
Trading Options for Edge by Mark S. Sebastian.
Just search for Greasy Meatball, and you will find it. And, of course, head on over to Option Pit for all that good stuff, as well as all things. And where should they go for the Prime Meridian stuff?
Just go CarmenLineCapital.com, or you can email me, Mark, at CarmenLineCapital.com.
I'm joking. It's not called Prime Meridians. We have to change it now because I've called it
KARMAN. Although I should buy Prime Meridian Fund and have it redirect.
You should, because that's a line of demarcation that you're missing in your fund selection. And when I think that, everyone wants the Prime Meridian. Maybe, all sorts of fun. We can get into that. Instead, let's go back to the CBOE, Mr. Kevin, in addition to fielding questions about when are you going to get Bitcoin options. Aside from that, what's cooking in the land of all things CBOE Options Institute?
Well, I'm now following Matt on Twitter. Anybody that's got American Psycho as their profile picture is a good follow, and anybody that apparently likes the music of Ween, also a good follow. Next week, I am headed to a TD Ameritrade Advisor Conference. I'm going to be in Orlando. It'll be nice to get some warm temperatures and advocate for the broad utility of options, which with people that would rather be golfing and generally don't care to really know about how options work, but explaining risk-adjusted returns to them. So it should be excellent.
All right, check that out. You know where to find it, CBOE.com. And on behalf of myself and the Greasy Meatball and the Thompson twins and Kevin over there at the CBOE, I want to thank all of you for downloading, streaming, subscribing, all the fun stuff that you guys do. If you're listening live, stay tuned. We'll be back in about half an hour, actually 25 minutes, with all things Typhon. If you like a little Bitcoin futures, spoiler alert, we'll be talking some of that, as well as vol and crude and some of the indices and metals. Stay tuned. You never know what the heck's going to be on that show. If you want to stay in the chat, meanwhile, we'll play a little fun stuff for you to keep you occupied. If not, we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. facebook.com/theoptionsinsider or via questions@theoptionsinsider.com.